Even as index heavyweights hold steady, mid-cap see some selling pressure. Auto and healthcare are the prominent gainers, while IT and industrials drag.
Eicher Motor revs up on healthy Q3 volumes, market share gains and strong margin improvement on better mix and price increases, while a mega 70,000 unit Indonesian order powers up Tata Motors. M&M reports an inline set of numbers.
Apollo Hospitals injects optimism into healthcare stocks after a strong Q3 show on resolution of issues with insurers. The healthcare major adds that discussions with the Delhi government on the joint venture Indraprastha Medical Care are on.
Britannia recovers from the GSE disruption in October to note strong growth in November and December in biscuits as well as adjacent categories. It also makes the best of the stable commodity prices to extract higher margins.
The government launches an offer for sale for up to 5% of BHEL's equity. The floor price of 254 rupees per share is at a sharp 8% discount to the previous close, exerting pressure on the stock in trade.
Hello, good afternoon. You've tuned into Halftime Report, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is my colleague Ekta Patra as well. Good afternoon, Ekta. And we have M&M that just reported their numbers a short while ago. Inline set of numbers that has come in from the company. Expectations were higher as well. So inline is good for the company. 1% growth uptick is what M&M is managing to hold on to, not growth. Net profits up by 47% nonetheless, but it's off the day's highest point. And markets today also are, just managing to hold on to green, resilient. Not much of a sharp up move or a downside.
Hi, Vinny. Yes, absolutely. As of now, we have M&M, which is just about holding with a gain of around 1%. And we're going to get more details from Sudarshan possibly in a bit on M&M. But just want to touch base on the markets. There is some amount of resistance which is coming through on that 26,000 mark for the Nifty. So currently just about higher by around 17 odd points. We have the broader markets which are just about flattish at this point. So around 100 points lower currently for the mid-cap index, with the Bank Nifty just about holding with its head above the water. It's really very flat and quiet for the indices, but the underlying trend is a lot about specific stocks. So if you want to talk about BHEL, if you want to talk about Lakshmi Dental, if you want to talk about Eicher Motors, Apollo Hospitals, SBI, that's really where the action is. Specific stocks are seeing buying and selling at this point in time in terms of the trend that we're seeing in the markets at this point. But let's get to our first stock that we're tracking. Eicher Motors is in fact in focus. It's trading higher after posting what was a good set of Q3 numbers. Let's go across to Sudarshan, who's doing all of the number crunching for us. Sudarshan, over to you.
Eicher Motors is top Nifty gainer today after company has reported a strong set of earnings for Q3 FY26. Till the last quarter, there was one concern related to Eicher Motors. That was the margin. Company was failing to cross the margin level of around 24 or say 24.5%. But this quarter, on that front, also company has outperformed and has done much better than estimates. In Q3 FY26, margin has come in at 25.5%. That is at 5-quarter high. And also, it's after several quarters that company has seen EBITDA outperforming both volume and revenue growth. So because of the strong volume growth that company is seeing for both Royal Enfield as well as commercial vehicle, it has seen an increase of 23% revenue in Q3 FY26. And EBITDA too has seen a jump of 30%. Margin, as I've told you, has increased to 25.5% on the back of positive operating leverage, better mix, and the price increase that company had taken last year and also this year in the month of January 2026. What about going forward? In Q4 also company is expecting a strong momentum that started post GST rate cut and during the festive season will continue in Q4 FY26, and even in FY27 company is expecting high single-digit growth for motorcycle business for the entire industry. So strong earnings for Q3 FY26 and the positive outlook are helping stock to move higher.
Okay, so but also Samvardhana Motherson, that also is buzzing away in trade today. Take us through the numbers for that as well.
Some other Motherson shares are buzzing in their trade after company has reported a strong set of earnings for Q3 FY26. Earnings though had come during market hours yesterday, but after that company had held analyst call, and in that it has maintained positive outlook going forward, and also it's saying that it's on the track to achieve the target that it has given in Vision 2030. And in Q3 FY26, the revenue was highest ever quarterly, and on the margin front also, for the second straight quarter, margin has been above 9%. So profit in Q3 FY26 has increased by 24%, revenue was higher by 4%, EBITDA has increased by 6%, and margin has increased to 9.7% versus 9.5% in the same quarter last year. Gross debt though has increased both sequentially as well as YOY. In Q3 FY26, gross debt was 17,670 crore versus 16,830 crore last quarter and versus 16,354 crore in the same quarter last year. Raw material costs have seen a significant increase in the last few months, but in Q3 FY26 we did not see the full impact, but company is also saying that it's going to pass through the entire raw material cost, and it happens with a lag. So in Q4 there might be a minor impact, but if company manages to pass on the entire cost, then there might be a minimal impact. So overall, it was a strong set of Q3 FY26 earnings, and also company maintains positive outlook, and in all probability margin may remain about 9.5% going forward as well.
Okay, all right, Sudarshan, thanks very much for that. In fact, it's a lot about the auto stocks today, and M&M should come up for you because it's off the day's highs, just about higher by around 0.4%. So it's cooled off a little bit from the highs post numbers. So do watch out for that. But the other stocks which are in focus from the auto space include something like a Maruti, which is managing to hold up with gains of around 1.3%. So really revving ahead for the entire auto space at this point, barring M&M, which is now seeing a bit of a downtake. We'll take a short break on that note, but we'll focus on our What's Trending segment, which is hospital stocks in today's trading session. That conversation coming up next. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. Now let's shift focus and put the spotlight on the healthcare space. And that's in our What Trending segment, where we are looking at hospital stocks specifically today, with Apollo Hospitals, Max Healthcare, Narayana and others seeing strong traction. The trigger, a combination of earnings momentum, clarity on insurance agreements after recent cashless disruptions, and the CGHS rate revision that could boost the margins. Ekta, take us through what's going to be driving this rally, either valuations, the earnings, everything that has come in here.
Well, yes, the entire hospital space is buzzing, and that's what we're looking at on Halftime Report under our What's Trending segment. So I'm going to start with what's really driving this rally today. First is the earnings. If you look at Apollo Hospitals, it's come out with a good set of numbers. Average revenue per patient is up 11% this quarter. Apollo Hospitals Health core company, which is basically Apollo 24/7, as well as the pharmacy business, has reported its lowest ever digital cash loss of around 29 crores. Now, triggers for the hospital companies going forward. There is an agreement which is reached with the insurance companies after there was that disruption on cashless services that took place. So Apollo Hospital says that the insurance contracts are now tied up for 2 years. They've seen 8% of volumes come in from insurance this quarter. And Max Hospital, we spoke to them earlier yesterday or down the week. They said that they hope that there is this new mechanism which is adopted with the insurance companies, which won't have issues reoccurring going forward. So that seems to be one of the key triggers playing out at this point. The other one is the CGHS revision. The rate revision was announced in October with around 2,000 medical procedures under CGHS with an average of around 25 to 30% rate increase. So that is going to really aid hospitals. Max Health, in fact, said that the revision will probably add around 200 crores positively to their EBITDA, but there is a GST impact of around 60 odd crores, which one needs to factor in. The other thing is that the budget has proposed a scheme to support states in establishing 5 regional medical hubs for medical tourism. Remember that medical health value is something that the street is looking at in terms of positioning for companies. And that would be one of the key triggers going forward in terms of international patient revenue revving up. Capex, Max has announced 3,000 bed addition from FY26 to FY28. Apollo Hospitals plans to add 4,400 beds going forward. In terms of valuations, what we are seeing is Apollo Hospitals. It is down around 7% from its 52-week high. Max, Fortis, Jupiter Lifeline, all of these stocks have corrected and are trading anywhere between around 23 to even 20 times in terms of FY27 EV to EBITDA, with analysts saying that there is room to increase or to get to the peak valuations that these hospitals were trading at. In fact, let's listen in to the management of Apollo Hospitals. We spoke to them earlier this morning.
So there was an extra 8% volume increase from insurance with a 20% revenue increase. So this will continue, and with this, we should be able to get higher occupancy metrics. Insurance enabling patients to enter the Apollo system for robotics, for transplants, improvement in cardiac work by 20%, onco work by 18%, orthopedic 17%, and gastro 17%. This has all led to a higher ARPP. Insurance improvement is about 5% total volumes. If moving up from 43 to 48% now come from insurance. Can we continue with the ARPP of 11%? I think, we started from a little bit of a low base effect, and we've moved to this number, therefore showing 11%. Will this continue? I think it could probably continue in the range of 5 to 6%. But what will improve is volumes. And when volumes improve, operating leverage and therefore absolute EBITDA and profitability will continue to improve.
All right, so that's on Apollo Hospitals, but we also spoke to the management of Max Healthcare, who added that they see lower seasonality and higher average revenue per occupied bed due to more complex cases that they saw in Q3. Listen in.
I think we need to look at it apples to apples. That means the erstwhile hospitals as a separate bucket, and perhaps the new hospitals as a separate bucket, because the new hospitals, if they're in tier 2 cities, the ARPOBs and the EBITDA per bed may be lower, but I think the way to look at it is on the basis of ROCEs that they're generating, because eventually we end the business of putting the incremental rupee that we generate at attractive ROCEs, not necessarily at higher ARPOBs and EBITDA per beds. Having said that, the complex cases on a quarter-on-quarter basis are also basis seasonality. The second quarter typically a vector bond season, so you have higher occupancy but lower ARPOBs, whereas the third quarter on its own, you'll have lower vector borne diseases and perhaps higher ARPOB because you're doing more complex cases.
Okay. On that note, we're going to slip into a very short break. We're going to continue with the focus on hospital stocks with Aditya Khemka of InCred Asset Management. Stay tuned in for that conversation.
Welcome back. Well, quiet for the market, so let's continue talking about what's trending today on Halftime Report, and that's hospital stocks. We spoke about the valuations, we spoke about the triggers, but to discuss more, we have Aditya Khemka, who's the fund manager in InCred Asset Management, who's with us this afternoon. Aditya, hi, welcome to the show, and good to see you in. A lot of the hospital stocks are buzzing today. Just give us a sense in terms of what you made of the earnings this time.
Good afternoon, and thanks for having me on the show. So I think, look, hospital stocks had reported in line to slightly better than expected earnings, and actually, I couldn't really understand why hospital stocks were down for the past 2 months, because generally, stocks fall in anticipation of a poor quarter or poor earning growth, but that was just not the case. And now that the hospital stocks all have delivered decent earnings, I think the stocks are just reverting to their mean valuations. So I didn't find anything extraordinarily good or bad in the current quarter.
Okay, Aditya, you didn't find anything extraordinary in terms of good or bad during the quarter. But then, what is your view now from here on? What is your pecking order when it comes to these hospital stocks then?
So we don't really comment on each and every hospital stock that's listed, but I can comment on the 3 stocks we own in the PMS that I run. So at the Incred Healthcare PMS, we own our largest weight is a hospital company called Healthcare Global. That's a super specialty oncology hospital chain. Our second largest holding is a hospital based out of Gurgaon, Delhi NCR, that's Artemis. And our third position within hospitals is Rainbow Hospitals. They do maternity and mother care.
Okay. Well, you're not looking at multi-speciality as much as you're looking at specific, genres of hospitals. Is that correct?
Yeah, that's actually correct. Ekta, if you look at the global hospital ecosystem, or if you look at the global markets, each and every market, when they begin their healthcare journey, they begin with multi-specialties. But as the markets mature, as the markets actually start gaining more traction in terms of RPOBs, in terms of patient footfalls, the market eventually evolves into super specialties, where super specialties are looked at as better quality of care, more high tech, more advanced care, basically. And patients are willing to pay a premium for better quality of care. So we think India is at that point where multi-specialty hospitals are there for most of us to access, at least in the urban areas, and hence the demand for super specialty is growing faster. And hence, our presence is more in super specialty than in multi-specialty.
Okay. Well, interestingly, Aditya, a couple of the companies, Apollo, Max, mentioned that they've reached an agreement with the insurance companies because they had seen that disruption with regards to cashless services. So that seems to be settled now. How much of a trigger do you think that is for hospital companies? Was that an overhang?
Maybe in terms of narrative and rhetoric, yes. But in terms of patient footfall, no. Because remember, while cashless insurance was cancelled, insurance was still paying if you submitted the bills for reimbursement, right? So if you think of it from a patient perspective, just because I'm not getting cashless was not a good enough reason for me to avoid a surgery. So I will still go for the surgery, pay the bill out of pocket, and then apply for insurance reimbursement. So I don't think it caused any disruption in financials or footfalls. But yes, the narrative and the rhetoric had sort of gone against the hospital stocks. People were feeling that there will be price corrections, there will be negotiations with packages, with insurance companies, which is anyways an ongoing, business practice. Insurance companies keep renegotiating package prices with hospitals on a one-on-one basis. So that had no operational impact, but a narrative impact, yes.
Sure. Aditya, there's another important trigger that comes in for the sector is that CGHS, the rate revision, which happened in October, around 2,000 medical procedures, we saw this revision, right? And Max even spoke about that, saying that rate revision has actually added around 200 crores positively to their EBITDA. With these revisions, could we expect this to continue for hospitals, more benefits coming here now?
I don't know about more benefits, but obviously the CGHS revision is positive. Look, CGHS rates were last revised in 2015, and then they got revised now in 2026. So you can see that over a 10-year period, they have been revised by like 60-70%, and that too, not all procedures, some procedures. So you can understand, how much behind the rates were as they were, before this revision, and that obviously is helping the companies that have a significant sort of patient pool which comes with CGHS cards. And that is where, your Delhi NCR hospitals actually have more CGHS, ECHS patients compared to other hospital chains, which are maybe not so focused on out of Delhi NCR. So if you look at how we are positioned in our portfolio, we have Artemis Medicare, which is a completely Delhi NCR based player. And this is one of the reasons, the CGHS is one of the reasons why we believe the company will do well in the near future.
Okay, interesting. Well, Aditya, we need to leave it on that note, but always interesting to get your thoughts in on the healthcare as well as the pharmaceutical space. Thanks very much for joining in and talking to us. So that's the view coming in on healthcare stocks, which are really buzzing in today's trading session. We'll do one thing, we'll take a short break, but up next, Jay Thakkar of ICICI Securities will join in with some of his trading calls. So full tilt back on the market. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. Manisha Gupta is joining in now. Okay. Before we go to Manisha, let's go across to Sudarshan actually, because M&M had reported its numbers, largely inline set of numbers. For more details, what's happening here? What are the finer details that you have now coming in?
So it's in line and a good set of earnings that Mahindra & Mahindra has reported for Q3 FY26. On the consolidated basis, company has reported, Mahindra Group has reported revenue of more than 50,000 crore for the first time ever. That's the consolidated revenue. Now for the auto company, any auto company, two important metrics that we track. One is the volume and another is the margin. On the volume front, both for the tractor and for the auto segment, it has been seeing healthy volume growth in Q3 FY26. For both these segments, volume was higher by 23%. On the margin front also, despite the challenging environment, company has reported margin of almost 14.7%. That is in line with our expectations. And on the market share front also, in the auto business, company continues to gain market share both in the SUV, in the revenue, as per revenue, company remains the number one player. In the LCV, that is higher than 3.5 tons, company remains the market leader and continues to gain the market share. In the tractor segment, due to seasonal impact, it has lost market share by just 20 basis points in Q3 FY26. And considering all these factors, you can see revenue in Q3 FY26 has increased by 26%. There was an increase in EBITDA by 27%. It has come at almost 5,700 crore. And margin, as I told you, it was in line with our expectations. It has come at 14.7% versus 14.6% in the same quarter last year. Realization, overall realization has increased by 2.5% year-on-year, but on a sequential basis, there was a fall of around 2%, and that's mainly on the back of the sharp increase in the raw material cost we have seen. You can take a look at aluminium, copper, price of all these commodities have seen a sharp increase. For the auto business, EBIT was up 26%. Margin here also was almost flat. It has come at 9.5%. And for auto business, realization was up almost 3%. And for the tractor segment, again, volume was up 23%. And here also, company continues to improve the realization, and the increase was almost 2% year-on-year. Commentary remains positive. Company is saying that new launches of XUV9S and XUV7XO received positive response, and going forward also company believes that strong outlook that it had given earlier for SUV segment and for the tractor segment, it continues to hold that outlook.
Okay, all right, Sudarshan, thanks very much for that. So the stock is back up around 1.3%. A little choppy post reporting its Q3 numbers there. But Jay Thakkar of ICICI Securities now joins in to discuss what he's tracking technically for us this afternoon. Jay, hi, welcome to the show. Well, let's start with auto stocks. In fact, all of them are buzzing today. We have M&M, which just reported its numbers. Sudarshan just spoke about it. Technically, what are you liking there?
Good afternoon to you, Ekta and Vinny as well. I would say that, overall auto, in the recent past had seen a good, move overall. We see post the, August series. We have seen, or probably I would say since August series, we had seen a good run up, long build up out there in auto stocks. The overall index performed quite well, I would say, Ekta. And lately, in the last few weeks, we have seen some profit booking coming there on account of long unwinding only. Otherwise, I would say that the overall auto sector or the auto index is looking positive. I think that again, it's likely to inch towards the index targets of around 30,000 plus levels. And out there, we believe that yes, M&M, which has been a good performer and outperformer as well in the past, is likely to inch higher again. I mean, post is profit booking on account of long unwinding. So I think that M&M is likely to see the levels of around 4,000 plus again. Maruti, I think after a sharp correction, I think from here on it should witness good up move again. That's among the four-wheelers. Ashok Leyland has been already doing good and has been trading around the life highs itself. So I think Ashok Leyland continues to be the outperformer, followed by M&M and Maruti as well. I think these are the few stocks from the four-wheelers, be it passenger or the heavy vehicles, I would say, are looking positive. But then among the two-wheelers, I think that Bajaj Auto is one stock which has not yet seen much of the short covering, although we have seen some short covering happening there again. So there is a good chance that we might see 10,000 plus levels out there in Bajaj Auto as well. Eicher has already done good. The results have been really positive. The stock is trading quite well. But then Bajaj Auto is also one stock which can be looked at post Eicher Motors.
Okay, Jay, thank you so much for joining us today and, speaking with us in terms of the auto sector and individual stock names in the auto sector as well. Thanks so much for that. But on that note, we're going to spend a very short break. After the break, Manisha Gupta will join us, and with her will be Siddharth Srivastava of Mirai Asset Investment Managers. Stay tuned for that conversation.
Welcome back. Joining us now is Siddharth Srivastava. He's head ETF product and fund manager at Mirai Assets. Siddharth, hi, thank you so much for joining in. And what a number that we've seen January throw at us when it comes to buying in sense of gold and silver on the funds there, much higher than what equities done as well. I do understand that January also would have seen some redemptions, but the net inflows clearly have been on the higher side. How are you looking at this trend continuing from here, given the fact that the prices seem to be stabilizing a bit now?
So overall, I expect the trend to continue. People investing more in gold and silver ETFs. Gold more so because we have positive view of gold going forward. Silver probably we are a bit more cautious on. But it's not just this year and this month. Gold we are seeing inflow of almost 64,000 crores in last 1 year. Silver we have seen inflows of almost 33,000 crores in last 1 year. So this trend has been there since quite a while. Even on a trading basis, Manisha, last year, average trading of both these precious metals on exchange was around 1,100 crores on a daily basis. That has shot up to almost 8,000 crores on a daily basis this year. Some bit of it that is return chasing, but I think precious metal as a part of portfolio will start getting more and more importance going forward.
Siddharth, I was looking at numbers on when you want to import silver. Even today, it is at a premium of $1.5 to almost $2 therein. And we do understand the volatility that there is in silver, and that the basic nature of ETFs is that it has to be backed by physical silver as well. How are you looking at the volatility in the physical markets and the fact that we've seen higher volatility in the ETF prices than what the physical market at some days put out?
Yeah, so basically, even if we look right now, gold is down 10% from its all-time high. Silver is more than 30% down from its all-time high. But that doesn't change the fact that even now on a YTD basis, silver is up around 13%, gold is up around 17% on a 12-month, up by 165% for silver and 80% for gold. So I think retail segment is obviously looking at this recent returns and let's say piling on more to gold and silver investments. Yes, volatility will continue. See, ultimately what ETFs do is mirror what is happening in the physical spot market. Yes, there has to be some comparison with what is going on in international, but we have seen in last 1-2 months that premium and discount in physical market at times are creating more divergence than what is happening in silver or gold market internationally. So people have to be cautious that ultimately these ETF will replicate and give returns which are corresponding to domestic spot and not international spot or MCX futures.
Sure. So now the other thing is that it can't just be retail driving all of those numbers. The expectation also is that we've seen HNIs, family houses, institutions, big money come into ETF.
Absolutely. I'm like most of the conversations which we are having right now, even if we're trying to pitch equities, is turning out to be towards gold and silver, and it's all across the board. Like I mentioned, that we continue to remain bullish on gold per se, even at these levels, and that is what you're seeing. I think trend a bit while back was that in silver we are seeing more inflows, but now I think that has sort of stabilized a bit. We are seeing more traction in the gold ETFs than per se in silver, but I think both commodities will continue to get traction at least in coming months.
Siddharth, what is the sense, if you can share with us, on new folios, the kind of ticket size perhaps that we saw in the month of Jan to give out those numbers?
So yeah, so correspondingly, folios have also significantly increased, but from a ticket size point of view, I think what we are seeing is like I mentioned, that not only retail, but we are seeing bullion traders and commodity traders also participating significantly in both gold and silver market as well. while what is happening on AUM and net flows is very interesting in terms of the increased share size of these two precious metals in inflows. But I think also what you just pointed out, that volatility and movement in terms of what is happening on the exchange in terms of volumes increasing 8 times simply highlights that it's just not only AUM where the things are moving, but also trading, intraday trades, hedging, etc., where we are seeing uptick in both gold and silver ETF.
Okay, all right, Manisha. Thanks very much for taking us through that conversation. So yes, the discussion around gold and silver ETFs and the interest there continues. But just wanted to point out that these labs numbers came out. It looks largely like an inline set of numbers. The margins look better than expectations. So the revenue growth is around 12% this quarter, and we were working with a growth of around 16%. So it's missed that in terms of the growth on the top line. But overall, the margins have come in better than expectations at 34% versus 31%. So that's Divi's Labs, just about a little volatile post numbers. The conference call will be held at 3 p.m. this afternoon. Some more details from the management at that point as well. We'll take a short break, but lots more on the markets once we're back. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. As of now, the Nifty is back in the red. It's down almost 10 points. So from when we started the show, it's come off from the green. It's moved to the red, down 30 odd points from 12 noon when we started the show. Broader end of the market also is seeing a bit of a muted day coming in, especially the small cap is seeing a bit of an underperformance. Advance-decline ratio clearly in the favor of declines versus advances in the trading session as well. So that is something that you should watch out for and where that is going to be headed. There was a crisscross in the morning, and after that, the declines were more than the advances. Stocks in the last 1 hour which have seen a fall coming in: Ather Energy, 361 WAM, as well as Lemon Tree is something that should be on your radar in the second half of the trading session as well. But with that, we're absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next, your Business Lunch.